Hello and welcome to the webinar. You're here just a little bit early. This is becoming a regular occurrence, these live events at the United States Gold Bureau. We had over 250 registered today.
Oh, wow, that's a lot more.
But we are going to get started here in just a little bit.
Yeah.
Thank you so much for being here. This is very exciting. I see a lot of familiar names that have been on our previous webinars.
Very good. Nice.
Let's go ahead and jump in. My name is John Poley. I'm your host for the Bureau Briefings. Each month we bring you content that has been requested from our customers and inquiries from the previous month. Today's topic is balance your portfolio. Very timely to have this today. My special guest, you recognize him from the last couple webinars, Joshua Hoy. He is the product manager at the United States Gold Bureau. Welcome to the webinar again, Joshua.
And good to be back. Thank you for having me.
Good to have you. Joshua, you've been with the company for a while and you've held a couple of different positions. I'd love it if you'd tell our audience about your journey at the Gold Bureau.
Yeah, so I started with the company right around 5 years ago, and I came on as a precious metal specialist, which is just helping clients understand a little bit more about the market and how to protect their wealth. I was able to do that for 4 years, and then almost about a year ago, I took an opportunity to work as the product manager for a lot of our core products, and just a different avenue, but kind of the same process, just helping people understand a little bit more about how to protect their money within this market.
I've been familiar with the Gold Bureau for a long time because it's a big deal here in Texas to drive by this building.
Yes, it
but
is.
We've actually been in business for 2 decades.
Yes.
Would you mind giving a little bit of the highlights of the United States Gold Bureau?
Yeah, so the United States Gold Bureau is the largest authorized numismatic bulk purchaser of U.S. mint products in the country, and we work with some of the more reputable refineries and mints across the globe. As such, we can guarantee the origin, authenticity, purity, and quality of every product that we offer. We are an authorized dealer of NGC and PCGS. We have full state compliance and oversight on the Texas Bullion Depository. Through our parent company, Lone Star Tangible Assets, the United States Gold Bureau was selected by the state of Texas to build and operate the Texas Bullion Depository, which is the only state-administered precious metal storage facility in the country. We have been in business since 2003. Since then, we have helped our clients protect over $2 billion worth of transactions.
That is a lot of transactions.
It's a lot of protection for our clients. We're happy to do it.
We have our financial disclaimer on the screen here, and I'd like to go over today's format. I promise you, this is action-packed, 15 minutes. We'll throw in a couple of frequently asked questions. Okay. You'll notice you have the ability to ask questions during this webinar. Obviously, with over 250 registered for this event, Joshua and I can't handle all those questions in 15 minutes. We'd love to, but what we're going to do is take those questions that you do ask during this webinar and hand those over to our very capable precious metal specialists that will love diving in deeper with you. Before we get started, I just want to be clear. We are not tax professionals. We recommend that you seek the advice of a tax professional for any tax-related questions. Now, like I mentioned, today's main topic is balance your portfolio. Joshua, you want to start?
Yeah, absolutely. Now, a balanced portfolio is going to include a variety of asset classes. Now, each is going to serve a different purpose in managing risk and enhancing returns. A well-balanced portfolio is customized to match your specific financial goals, risk tolerance, and investment horizons, ensuring it aligns with your personal financial plan and allowing for future rebalancing due to economic shifts. There are many benefits to having a balanced portfolio. Nowadays, we are seeing markets at all-time highs, which can cause a portfolio to be overweighted in stocks and securities or underweighted in less risky, tangible assets. By spreading wealth across multiple asset classes, you minimize individual risk and the need for specific outcomes, while ultimately maximizing your wealth preservation. Having uncorrelated assets will limit the effects of inflation and other economic forces on your wealth, while giving you the opportunity for steady appreciation. Having a healthy amount of liquidable assets is generally recommended with any investment, but also makes rebalancing your portfolio much easier.
Why now? What is it, Joshua, that makes this year such an opportunity for balancing the portfolio?
It's a great question. And well, not necessarily this year, but more right now. Balancing your portfolio is a process that you should probably already be doing a couple times a year. Right now, we are seeing some of the highest inflation rates in modern history, making it even more important to preserve your wealth. In simple terms, you are paying $2 more per gallon of gas at the gas station, and fast food like Chick-fil-A is now 28% more expensive than it was 3 years ago.
That spicy chicken sandwich is a lot more than it was.
You know, I'm guilty of it too. I think that 28% might be worth it.
I will pay that for a heartburn.
But you know, understanding how to balance your portfolio is a great question, and we're going to discuss some of the biggest economic factors affecting your portfolio today, starting with the Federal Reserve. Now, at the most recent FOMC meeting, it was decided that interest rates would remain the same. The potential consequences of lowering rates too soon can actually lead to higher inflation by speeding up the economy. Alternatively, keeping rates this high for too long can push the United States into a recession or a depression. One of the biggest factors affecting your purchasing power today is the M2 money supply. The M2 money supply is the Federal Reserve's estimate of the total money supply in circulation. Looking at this chart, it is very easy to tell that the more money put into circulation, the higher gold goes. This is why gold is considered the ultimate hedge against inflation. Having a balanced portfolio requires there to be assets that protect your wealth from inflation. Now, the blue line on this chart shows the M2 money supply in trillions of dollars. Notice starting in the year 2020, the massive increased rate of printed money. Now, after COVID, the money supply continues to increase. The yellow line in this chart shows the historical hedge of gold during inflationary times. We can see that gold spiked at the end of the 1970s as the United States was dealing with a plus 10% inflationary period, and again during the collapse of the housing market and eventual bailout. Gold prices follow the money supply. In 2024, we are experiencing this in a completely new way following the COVID-19 pandemic, with increased government spending and the introduction of multiple stimulus bills. Today's level of inflation can be attributed to the lack of control or understanding of increased money printing in such a short period of time.
Josh, you're talking about a large amount of money, $20.87 trillion.
Yeah.
Is that really affecting everyone in the same way?
John, in a lot of ways, yes.
Would you mind giving us an example?
Well, you know, take the grocery store, for instance. According to the Bureau of Labor and Statistics, $1,000 worth of groceries in 2004, just 20 years ago, would cost $1,762 and some change today. That's a 70% increase just on groceries. Now, there are different ways of getting the best bang for your buck at the grocery store. How do you know if you're getting the best bang for your wealth? Securities markets are also affected by inflation and make wealth preservation very challenging.
I know of businessman Warren Buffett. He has developed a simple strategy.
Yeah, you're referring to the Buffett indicator.
Yeah, exactly.
Well, you know, our audience, if they're not familiar with it, I'm sure they'd like to hear about it.
Anything we're about to say here, you can go to Google and find this. The Buffett indicator measures the ratio of the stock market's total value to the GDP. A high ratio indicates overvaluation, whereas a low ratio is an undervaluation. Pretty simple, right?
Yeah.
High values suggest that stocks are expensive relative to economic output, indicating potential overvaluation. Look on this chart here where the blue line greatly starts to exceed the green line. That's exactly what we're talking about with overvaluation. By including precious metals in your investment portfolio, you can build a resilience against economic cycles. They act as a counterbalance to the volatility of the stock market. Gold and silver not only act as a hedge against market volatility, but also enhance the overall balance and security of your investments, ensuring that your investment strategy remains robust even when the stock market fluctuates.
Perfect. Again, that's the Buffett indicator. I'm gonna have to do a little bit more reading on that because it sounds like such a great tool.
It really can be. But in recent years, a big concern of mine, seeing that I have some gray hair and I've been through a few of these recessions, is cash in my bank.
Okay.
How much is too much cash and what is the proper balance?
So that is a question that's going to be difficult because it is based on person to person, but the proper balance is just not so simple because there's always a need for cash and cash equivalents to live our day-to-day lives. However, excess cash reserves can not only expose you to higher rates of inflation, but can put your wealth at risk with modern banking practices. In recent years, there have been concerns and examples of banks failing. The banking sector has been experiencing significant turmoil recently. In the first quarter of 2024, U.S. banks reported over $500 billion in unrealized losses. And this marks the 9th consecutive quarter of high unrealized losses since the Federal Reserve began raising interest rates in early 2022. At the same time, central banks accumulated 290 tons of gold in quarter one, which is the strongest start to any year since 2000. Now, understanding these dynamics can highlight the benefit of holding short-term assets and long-term investments. Precious metals provide stability and act as a hedge against economic fluctuations, making them a valuable component of a balanced investment portfolio, especially during difficult recessions. Now, as we have mentioned, generally gold responds well to volatility in the stock market, but gold is your greatest asset during recessions. We can see that during recessions, the demand for safe haven assets increases tremendously. This is why having a balanced portfolio is having enough cash for the individual's lifestyle, having enough short-term assets or cash equivalents, and having long-term investments to protect no matter what happens. Now, a couple questions you might want to ask yourself. Is the excess capital in the bank account accruing more inflation than interest? Is your portfolio truly balanced? Is your entire 401k IRA only in stocks and bonds? Well, at the United States Gold Bureau, we specialize in creating a precious metals retirement account for the individual. Whether you're aware of the tax benefits or just looking to leave a legacy for your family, we will make sure that you are informed.
To speak with an IRA specialist, please call 1-800-775-3504.
Perfect.
We covered, as promised, a lot of material here, but we still have a few minutes left. In the closing minutes, I'd like to grab a few questions with you. How do I get started with balancing my portfolio?
Well, I would start by identifying how much of your wealth you want in each area. Picking a percentage you want and can stay consistent with, and one that doesn't put you at risk. Here are some examples of different investment philosophies. An easy rule of thumb: the more conservative the investor, the further out you should plan. The more aggressive the investor, the more liquid the portfolio should be. When you're talking about the precious metals portion of your portfolio, well, the U.S. Gold Bureau has an unmatched 100% buyback guarantee. If you do business with us, we will do business with you. Bullion will always be liquidated at the current market value or spot price, as we've discussed previously. If investment grades have been held for 5 years or more, we recommend taking advantage of our consignment program, but you always have the option to take an immediate bid price if it's an emergency.
That leaves a lot of options for our clients.
Well, with a lot of options comes a lot of opportunity for success.
I'd like to point out at the usgoldbureau.com, we have more information on this exclusive program for our clients.
Right.
Today, we've learned about the urgency of balancing the portfolio now. 24 hours after this live webinar, we'll send you an email with a link to the entire recording. I know some of you came in just a little bit after we started and covered a lot. We're also in that email to you going to send you a link to our past webinars.
Very good.
Please contact us, as we mentioned earlier, and as we have on our screen, if you have good eyesight, 1-800-775-3504 to speak with one of our precious metal specialists. If you did ask a question on the webinar today, I'll be getting that to one of our precious metal specialists promptly after this webinar to reach out to you during our Monday through Friday business hours.
That'd be great.
Joshua, another great webinar in the books. Thank you for covering Balance Your Portfolio.
Oh man, it was a pleasure to be here. I'm happy to be here.
And we're so happy to see this audience growing each webinar that we do.
Absolutely.
And we look forward to seeing you next month with another great topic.
Appreciate your time.
Thanks,
Take it
everyone.
easy.